Hello everyone, welcome to the Ichimoku.co daily futures market review for the trading day ending Wednesday, July 1st. Firstly to gold futures, and looking at the monthly charts first, and we're looking at this second last candle here on the chart. That last one there is very small, and that's the new candle that represents 1 day's trading for this month. But we see the formation of a black body candle, a downtrend in place, and the market trading below each of the Ichimoku indicators. So in that longer term time frame, we have a very solid bear market in gold. Findings very important to support at the 1155 level, and it's been tested on about 3 or 4 occasions over the last year or so. So very important support there, and suggesting that if we do see a bearish close down below there, we could see gold futures trading down to around the 1044 level, even perhaps down to the round number 1000. Any rally over the last couple of months has found strong resistance at the Tenkan-sen, trading at 1219, and just above there we have the 1227 previous level of resistance. Now just looking at some patterns here, and here we have formation of something of a wedge type pattern. It's something of a congestion area. These type of patterns that tend to run with the downtrend that we've got in place tend to be reversals, but they don't always be. They can be continuation patterns, but what will be important will be either a close down below that lower barrier or a close up above, and in line with the market being bearish in those longer time frames, it really does suggest that it's more likely to be a continuation pattern. Now we also have formation of something of a smaller type pattern, something of a pennant type pattern, and here we have this downtrend in place, the pennant forming very quickly over a tight range, looking for a breakout in either direction. At the moment it certainly does look as though the way this new month is developing that we may have the breakout to the downside. So we'll be looking for a close down below that bottom barrier, but we won't know until the month has ended, because the breakouts, the completion of the patterns are actually based on the close either above or below the boundaries of the pattern. Moving next to the daily charts with gold futures, and here today we've seen that might end up being a very important close down below that important 1170 level of previous support. It has been an important level in the recent past, testing on 2 occasions over the last couple of months, with buyers coming in quite solidly when the market has tested beyond that area. We've had some decent rallies up through the Ichimoku cloud on the previous rallies off this support. Today we've seen a bearish close down below the 1170 region. What's important now is if we're going to see some strong follow through, and I suggest if we see another strong bearish close, and if we can test down below this swing low around 1160, 1161, we could easily see the market testing down to 1155 or down to 1145. Now further bearish activity to the downside would be in line with the market being bearish in all 3 time frames, trading below the cloud, the Kijun-sen and the Tenkan-sen here, which are trading around 1185, and the Chikou span is supporting this bearish price action, suggesting we have solid downside momentum. But this support that's extended down through 1170 down to the swing low roughly around the 1160 area is very important. Moving next to Nomics Oil Futures, and here we see the market trading well down below the Ichimoku cloud. We had the breakout down below the cloud in October last year, the strong follow through confirming. With the monthly charts, bear markets tend to be determined by the breakouts below the Kijun-sen in that medium term time frame. The market has rallied over the past 6 months or so, and we saw that solid downtrend turn into spinning top type candles, small body candles. We then saw a decent rally with the white body candle 3 months ago, and for the last 2 months, including this current month that has finished, which is the second last candle on the chart, we saw formation of these very small bodied candles whilst the market was attempting to trend up. This suggests these spinning top type candles are candles of indecision. It suggests that there is good potential for a change of trend, and as we look at this current month just for today's trading, there has been very strong selling in this market, and there is a possibility of the longer time frame trends here, with the market trading down below each of the Ichimoku indicators coming back into play and changing the trend in the first time frame back to the downside. Now, if we look at the angle of the Tenkan-sen here, it is pointing down very sharply, and that's still reflecting that strong downside momentum that we're seeing in this market in the short-term time frame, and suggesting we could see further downside here. Now, looking at the daily charts, and very important trading activity for today. If you recall, we were watching the market form this very large congestion area where we were watching the resistance extending up to this zone between $60.68 and $62.62, and each time that the market tested there, we saw strong rejection, with the market generally finding support around $58.32 and a couple of times down close to this $56.17 region. For today's trading, we've seen the strongest bearish close down below the support at $58.32, a very large black body candle where the sellers have taken strong control, and this is off the back of the market finding resistance at the top of the Ichimoku cloud and around the Kijun-sen and the Tenkan-sen indicator. It does suggest that there may have been a very important change of sentiment in this market. Now, previously, whilst the market was finding support down around this $56 level, we did have the market trading up above the cloud, so we had an overall bullish bias, and the buyers were attempting to come back in. Now, with the market trading within the cloud, that sentiment has changed, and that bullishness is no longer present. We now have a neutral market in big picture terms, with a bearish market in the medium and fast term time frames. This suggests that if the market can breach down through this 56.17 level in a bearish manner, we could easily see Nomics Oil trading down to 54.66, or even possibly down to lower levels, with the support from the Ichimoku cloud extending all the way down to 52.41 at the moment. Moving next to wheat futures, and here we see a bearish market in the longer term time frame by still trading down below the Ichimoku cloud. Previously, we had the strong bearish breakout down below the cloud a couple of years ago, rallying to the cloud and being rejected from there on a couple of occasions. The market has closed for this month up through both the Kijun-sen and the Tenkan-sen, where these indicators over the last year or so were holding as very strong resistance. The bullish close up above there suggests that we could see wheat futures trade higher, perhaps at least up to the 686 level if we do see follow through. But at the moment, as this new candle is developing, we're seeing selling coming in this new month. Now, we were able to draw a trend line some time ago, and importantly, the market is trading just at that trend line, and it may offer itself as strong resistance, and what we're seeing now is selling coming in off that trend line. So the next month is going to be very, very important. If we do see the market test to lower levels, potential support at the Tenkan-sen indicator trading at 568.88, which is just below the low where the market's traded to for this current month. A strong bearish breach through there and through the swing low here at about 552 could see wheat futures eventually testing back down to their major lows about 465. Now, just looking at today's trading, and that's the second last candle on the chart here that has finalised today. A black body candle, and that's an answer to the last couple of trading days with the solid buying, the market breaching through the top of that previous zone of resistance in a bullish manner, trading up through some very important resistance, including the 600 round number level, the 617.75 level, previous area of support, now holding as resistance, and some decent price rejection from there today, with the sellers taking back control of the market away from the buyers. Now, it's no surprise that we have seen this type of trading today. If we look at the last 4 or 5 candles, they've been very extreme candles, and a retracement here is no surprise really. The thing that we haven't seen here is a change of trend, however, in the first term time frame. The sellers were unable to take out the low of that previous candle, and the market did test to the 575 level and find some support, and we can see the shadow on here, and it represents the sellers losing commitment down around that level. So moving forward, that's going to be a very, very important level if we are going to see a continuation of this downside momentum that we've seen develop for today's trading. Down below there, we do have potentially strong support at 557.50, and the Tenkan trading at 552 may offer itself as strong support if we do see any continued selling. To the upside, if we do see a rally from here, 600 may now start to hold as resistance, and then certainly up at 604 and this swing high that we've established yesterday at 617.75 could hold as, or continue to hold as, strong resistance. The important thing here, and what we looked at over the last few days, was the depth of this market away from, importantly, the Ichimoku cloud and the Kijun-sen indicator and the Tenkan-sen, and it was looking overextended. And the retracement that we're seeing here, it's little wonder that this has occurred. It doesn't mean that we're going to see any major selling or a change of trend in that longer term time frame. We're likely to see the market find some support and then the buyers come back in. Moving next to corn futures, and here we see the market rallying off the previous important support area around 347.75, breaching through some important areas of previous support and resistance through the 406.25 level, through the 425 level, and closing in a bullish manner up above the Tenkan-sen indicator, and suggesting we could see the market trade to higher levels. We do have potential resistance at the 450.25 region, and that's an area that has been important in the past, a fair while ago, but it is an important area. Any breach up through there could see resistance coming in at the Kijun-sen around 501.27, but looking at the depth of this market away from both the Ichimoku cloud and the Kijun-sen, still looking a little overextended, and certainly was looking overextended when we're trading down around 347.75. So just looking at the daily charts, and here we've seen formation of this very small bodied candle at the top of this significant uptrend. It was an extreme day the previous day's trading. The market was able to breach through the 425 level on the previous day in a bullish manner, suggesting we should, or we could see continued upside, and we did see that with the current candle forming a higher high and a higher low. The market did test down through 425, and we found support below there. So whereas it was a previous resistance area, we've now seen the sellers losing commitment from there, and the buyers have maintained control by closing up towards the high, so suggesting we could see continued upside. The thing to worry about here, however, is the development of the small body, and it suggests that the buyers have lost all of the momentum that they had for the prior day's trading. And this is very similar to a hanging man type pattern, not quite perfect, but very similar, and it's all about the small body and the loss of momentum. Now the problem here is that when we see these extreme days, markets don't tend to follow through in a strong manner as they did previously. And I think the fact that we've seen the formation of the white body and the 425 level holding a strong support and the loss of commitment from the sellers, it does suggest that we could see continuation of the trend to the upside. The thing to watch here is the high for a continuation of the trend, or watch the 425 level and the low of the current candle for formation either of a continued trend to the upside with a higher high and a higher low, or a lower high and a lower low if we are going to see any retracement. This market still is looking overextended in the depth away from the Ichimoku cloud and the Kijun-sen and Tenkan-sen, so it wouldn't surprise to see a retracement. So that's what makes 425 and the low of the current candle very important if we are going to have a retracement confirmed. Looking next to the US 30 bond futures, and here we see continuation of the trend to the downside, formation of the third black body candle here, very strong selling in this market, very similar type of close that we saw for the prior month's trading, and we saw a close around the midpoint level, so it suggests that where we want to see the sellers closing with control, we've seen them actually lose that control, and we see the loss of commitment as they tested down to the important 147 level of previous support, then resistance, and also at the Kijun-sen indicator. The bounce off this Kijun-sen indicator suggests that we could see a change of trend back to the upside. At the moment, we're not seeing that in this current candle, and it certainly does look as though this month could test down back to the 147 level and to the Kijun-sen. Any solid bearish breach down below there could see the bonds trading down to about the 141.28 level. But a rally here from here may find strong resistance at 153.11 with the Tenkan-sen trading around that area. next to the daily charts, and here we see very strong trading off that spinning top type candle that found a resistance for the second consecutive day at the Kijun-sen indicator at 151.19. The strong selling here, where the sellers have taken control away from the buyers from 2 trading periods ago, has seen the market breach down through the Tenkan-sen, and suggesting that we now have a bearish market in all 3 timeframes, and that's supported by the Chikou span here. The problem for the sellers is that we've seen the 148.23 level now hold as support again, and there is a possibility of some buying coming in, so we should be watching that area very closely. If we breach down through there early, we could see the bonds trading down to roughly about the 147 level of support, 147.12, but a breach down through there and through the 147 region could see the market trading lower. Now we were looking at the potential formation of that double top pattern, and this is very important how we have to wait until we have a close up above the upper barrier here for that double bottom, and we didn't see that close. We saw another formation of a peak just slightly lower than the previous. Some may want to call it a triple if we do test back down to the next low and then we bounce off there, a triple bottom, there is a possibility of that, but we don't know that that's going to form yet. Perhaps we're forming something of a rectangle type pattern rather than a double bottom pattern here, but certainly we can perhaps forget about that being a double bottom. With this being a potential rectangle and the strength from the sellers here as they build momentum approaching the support around the 2 troughs here, it's suggesting that we could see a breakout to the downside, which is something we wouldn't see with a double bottom, and that would make it a rectangle, and then we could see the trend that is in force here in a higher time frame continue back down on its way, and that would be in line with the market being bearish in all 3 time frames. Next to the S&P 500 futures on the hourly charts, and here we've seen something of a change of sentiment in this market today. Whereas we previously saw the market trading down below the Ichimoku cloud for the last 4 or 5 trading days, for today the market opened above the middle pivot point level and above both the Kijun-sen and the Tenkan-sen, and then rallied to the top of the Ichimoku cloud, being rejected from there. But throughout the end of the day, finding strong support at the bottom of the cloud and at the Kijun-sen indicator to rally, and for the start of this session finding resistance once again at the Ichimoku cloud. We have some selling in this market now over the last couple of hours, finding some support around the middle pivot point level at 2069, potentially strong support at the Kijun-sen and the Tenkan-sen extending down roughly to about 2065, and then down we have very, very solid support up until about halfway through the trading day around the first pivot point support level at 2058, which corresponds with the bottom of the Ichimoku cloud. There is good potential for the market to trade to the upside here if the Ichimoku cloud can be breached in a bullish manner, with the first pivot point resistance level coming in at 2080, 2081.